Hello my fellow freedom builders and welcome back to the channel. Today we're going to have a quick look at the market, not specific stocks but at the overall market, and here today I'm looking at the S&P 500 because I am not extremely confident about the development in the market right now. However, I have begun buying stocks, especially in Denmark and Sweden, where I live in Denmark, and many of you have asked me why on earth I bother taking a look at markets and trying to evaluate what kind of regime we are in, if we're going up or down and so on. And well, first of all, I like it. I spend a lot of time at it, and you could say that when I'm just investing and trading from a rules-based system, it doesn't really matter. But then again, it does a little bit, and I'll come to that later in the video why I actually do it. But let's take a look at the market first. And at the end of the video, I'll show you a neat new a little tool that I have developed that I use to assess the market with. So look forward to that one at the end. First of all, if you haven't subscribed to the channel already, please do so. It means a lot to us here. I'm spending a lot of work down here at the channel, so a little like, a little subscribe, and so on will really mean a lot to me. Anyway, let's have a look at it. We have the S&P 500 here. You all know the development in the S&P 500 over the last couple of months. We had this huge drop down, 36%, and then we had a very huge spike up here, also around 35%. If you're wondering why on earth did we fall 36% and then almost the same here, I hope you're not asking that, because of course it's always harder. It takes a lot more percentages to gain the same as you've lost. If you're starting at 100 and you lose 50%, you go down to 50. But to get from 50 to 100, it will take you 100%. So if you drop 50%, you have to get up 100% before you add break even. That's how it works with the percentages. So when we're having a look at this, I see a lot of technical analysts saying that this is the perfect place for the market to turn. And I actually agree. If we just take a look at the weekly chart here, and we are taking some, let's say that wasn't the one here, our Fibonacci tool, we can see that we are pretty much between the 50 and the 61.8 line right now. Well, in my world, there's not really any magic with these Fibonacci lines, but it is a good measuring tool to see where we might turn. And we often see that somewhere when we've had a big steep downfall like this, then around between 38 and 62% here is a place where we normally, if we go further down, this is often the place where we turn down, but nothing is absolutely certain. It could easily be that we just continue upwards from here, or it could be that we get a little tip down and then an upturn here. It might be so that a lot of people there that didn't get in on this huge spike up, they are sitting ready with their money, and at the slightest dip here, they'll start putting money into the market and make it spike again. That is one possibility. There's also, of course, the possibility that we'll see a lot of people that have a feeling that this will go down, and if it starts to go down, they start to short, which will make the downturn even faster, and we might see a little bounce up, and people are saying, wow, I've been looking for this event to sell even more because I didn't get rid of all my stocks. So we might see a further downturn. But this is just speculation. This is just me drawing arrows on a chart. So I would like to get into a bit more data and a bit more fact here. So let's have a look at it. First of all, you know, if you've seen my other videos, that I use the Fear and Greed Index. And what I like to see here is that we, in our uptick in the market, that we get above the 50 line. You can see that at the worst point where we ran really down here at the 2200s around here, we saw the Fear and Greed Index were almost at 0. So now it has started to rise, And when we look at this event or similar events, and we see further back in time here, we can see that in 2018 we had a big drop in the market, as well as in the fear and greed index, and then it stayed below 50 for quite a while, and this was a tough time in the market. Then we have had a while here where it stayed above 50 or almost above 50 here. Then we had the big crash, or 20% drawdown in the market in the Q4 of 2018, where we also saw that it stayed down here for a while. So now we haven't moved above 50 yet, and still we are seeing some hesitation in the market up here. We can see it in the daily chart that for the last 2 or 3 weeks, actually most of April, we have gone sideways here. So it is exciting, or of course it depends on if you are long or short in the market, but I'm looking forward to see now if we can get above this level and we start to see a drop in the fear and greed index again. It might actually be the first sign that we at least shoot down somewhere around here, 22 to 2400. No one knows how far and when it will go, when it will come, this downturn. Some people predict that it'll just be a little dip and then up. Some say we are going to see a double bottom. Some say that we are going to see a 40%, 50% decline here. But to be honest, nobody knows it. I don't know it, and not the smartest analyst in the world know it. So let's just stick with what we can see on the chart. One of my indicators that I use a lot is the simple RSI 14 period, and you have that in every single platform I think on the earth doing technical analysis with. Here the 40 period RSI. And as long as that is below 50, I consider a stock or a market to be in a downtrend. So even with this uptick in the market, we actually still see a downtrend when we're looking at the RSI. If we are looking at it, it is actually quite a good trend indicator. I know that most people use the RSI as an oversold, overbought indicator. I'm not too fancy of these terms, but you can see that here, for instance, in October 18, it dipped under. It tried to do something for a week here, but then it dipped further down, and that was the beginning of a large downturn. Then here in January, February 19, it went above 50 again, and that was the beginning of quite a long upturn here. Every time it dipped down below 50, it turned up again right away. And then we had the downturn here, trying to get somewhere for a week, and then we continued down. And we haven't seen a tick up above 50 yet. It can easily come this week or next week, and then we might be in the beginning of a further bull market here. But again, nobody really knows. I just tell you what I see in the charts. All right. Then I have been saying for a while, and those of you that have followed me knows that I've been saying this since January, because what I see here, let's just have a quick look, is that I'm looking at the, not really the number of cases, but the number of new deaths in the United States with this illness from China. And what I am looking at here, and that is a good part, what I've been saying is that we probably would not see an upturn in the market until we saw some breaking of the curve in the United States. And I must say that even though they are still running it kind of crazy over there, we can see that the number of new daily cases at least have stabilized and maybe have even broken downwards here. We can also see that the number of active cases are, well, at least it is quite stable here. The number of total deaths, when we're looking at a logarithmic scale, has fortunately not continued its very steep curve here, because that would have made it, well, I don't know, 500,000 deaths by now. But fortunately, we are quote-unquote only around 60,000. So at this point, where it started to bend the curve on the logarithmic scale, that was actually in the end of March, which is also around where we started to see some upturn in the market. It might be a coincidence, but I've been saying it all along that this was at least the first step we needed to see some serious upturn in the market. If we see the number of daily deaths, we can also see, hopefully, that this is the decline that we have been looking for, so that we can slowly work our way towards 0 cases in the United States. So this is actually quite positive, even though it is still run a bit funny in United States. Then fortunately we see some governors that are taking control of their own states and taking some responsibility for the process. What they really need now, and right now it is a fight over there who is to be performing the tests. So right now I can see that several states have joined together in some sort of collaboration about doing some contact tracing tests over there, so at least they can be prepared if or when the second wave of this illness should start to spread. So, but this is actually kind of positive, and that is something that could support this upturn in the market, definitely. Now, a thing I'm looking at, and the tool I mentioned in the beginning, and that's something I'm a bit worried about, and that is, let me just find it here. I'm making this report for my Danish paid subscribers every month. You can see that we have our colored trend schedule here. We have our Q scores, which is a fundamental part. We have something about where they are on the trends, if they're moving up fundamentally or not. But what is really interesting in this context is at page 19, I think 20 maybe here. It is our market index, and what that shows, it's actually pretty simple, but what it shows is how many percentage of the stocks, we're following around 180 stocks in Scandinavia right now, and it shows how large a percentage of the stocks that is above their own 20 SMA, 50 SMA and 200 SMA. So what it basically, normally in technical analysis, we're saying that a stock needs to be above its own 200 days moving average to be in a true long-term uptrend. And right now we can actually see that in Scandinavia we have only a quarter of the stocks being above their own 200 SMA, meaning that 3 out of 4 is still in negative territory. I know this is a bit of a special case because we've had such a huge drawdown in the market that of course most stocks are below their own 200 SMA. But we can take a look at the 50 SMA. We still have 2/3 of the stocks below their 50-day moving average. Normally, to say that a bull market is really smoothly running, I would need to see this at least up around 55 and staying there. So right now we are way below what I would normally call a good and healthy bull market. Then if you're using these numbers, we are having most of the stocks being down in bearish territory. But then we had this spike up, and it was actually above, I think it was at 92%, and that is 92% just a few weeks ago. 92% of the stocks were above their own 20-day moving average. And that, of course, is because they have spiked up heavily in this upturn in the market. But overall, the majority of the stocks have not begun a really true uptrend yet. So what I'm a bit afraid of is that we see some sort of drop, so that this percentage will get down as well here, and then we can start to move upwards. I hope that makes some sort of sense. We don't have too much data into our PDF files or PDF reports yet, but every week we get more in. Normally I have only been working with this 50 over and under 50 SMA, so it is really nice to have the 20 and the 200 included as well. We have the exact same here for the United States, as you can see here with all the stocks. And if we go down to one of the last pages here, we can see pretty much the same picture. In the United States we are tracking 445 stocks right now. And you can see that 26% of the stocks are above their own 200 SMA, meaning 3 out of 4 is below. We have 45%, a bit more than in Denmark, Sweden and Norway, but we still have 55% of the stocks below their own 50 days SMA. And we have 80% of the stocks are above their 20 SMA, giving us pretty much the same picture, that a lot of stocks spiked up, got above their own 20 SMA, but could not get above their 50 and 200 SMA, and now it is dropping. And it will be exciting to see how far this should drop and if the overall market will follow. But this is something that makes me a bit worrisome, makes me a bit nervous about the stock market. But to all of you out there that have been kind enough to ask me in the comment section if it isn't a paradox that I'm actually buying stocks even though I'm nervous about the overall condition of the market, it is not really a paradox. It is just that I have a guess where the market will go, and that is based on some data, on my experience in the market and so on. I have a hard time seeing how, with all that is fundamentally flawed right now, why the market is going up. I know, of course, that a big part of it is Fed and ECB buying up that debt, and maybe at some point even buying up stocks, who knows. But I have a rules-based system, and that tells me to buy. And I know that I also will get out in well before a big crash eventually could come. I got out of most of my stocks up here, so I missed the at least 70-80% of the really hard downturn here. And then I started to buy stocks, the first couple of stocks in the end of March here. So I have been in on a lot of the upturn in the market as well. So I'm not too worried. You should remember that staying out of the market can also be a risk. Staying out of the market and being in cash should be an active investment choice you make. And when I start to get a lot of buy signals, well, then I simply have to take my cash and put it into the market. Even though it really feels tough when you are pretty certain, when I'm pretty certain that the market should go further down, well, then I have to obey my strategies and my rules, because otherwise I am simply just guessing. So I have a feeling where the market is going, but if it goes in the complete opposite direction, I don't really care. I don't understand it. I don't think it is logically what it does right now, but that doesn't matter. If it is going up, who am I to decide which direction it should go? I just have to follow. That is my strategy. I am a trend follower. So when the trend runs, I jump on, and if it should start to move a bit more down like this, well, then I'll probably go out. So that is pretty much the logic of that. But I do like to have a very good feeling as to where the market is moving. Another indicator that I often use is the oil, and the oil is going down. And now I just took one of the WTIs here, the West Texas oil, and it is going down. And of course it is going down because not much oil is used right now in the world. And that is also a sign of an extreme slowdown in the market. And then all the economists and all the analysts can debate if we're going to see a V-shaped recovery or whatever. But this is gonna put some traces in the market for quite a while. And right now we are having all the earnings coming out, and we can see already that some of the oil companies are really severely hit. And we'll see that in the rest of many industries as well. So right now I'm kind of pessimistic, but I'm still in my stocks. And I will tell you when I plan to get out, if it starts to turn. I'll make a video about that. And tomorrow I'll make a video about how I have found many of the candidates that I'm looking at right now. I'll show you how you in 3 to 5 minutes can find all of the interesting candidates, both technically and fundamentally, in the market, and I'm going to use the screener here in TradingView to show you that. And I'll make that video tomorrow, and it'll be a little short video where I'll show you how you can easily find the best 30-40 candidates, trending candidates in the market, and how you can scan them for the best of these, the ones that come through the scanner. So that is the video for tomorrow. I hope that this was kind of helpful. Not that you should use it to invest from, because I'm not an investment advisor or anything. This is not buy or sell signals, but what I'm trying to do here is to give you some sort of picture as to what tools I'm using to evaluate the market and what my thought process is when I'm going through the different markets. So I hope that made sense. If you have questions, please leave them in the comment section below. Remember to subscribe, hit the like, notification, all of that down below. And I will talk to you again tomorrow with this finding the best candidates in 3 to 5 minutes. Looking forward to having you in here again tomorrow, and I'll talk to you soon. Take care of yourself and your money out there. Bye for now.